Hello traders, it's Francesco from FreeFX. Welcome to my video. I haven't updated in a couple of days, so just kind of looking back at USD. This has been on my mind a lot because I've tried to kind of trade this, and it's been quite choppy of late. And you can see on the daily that why it's been choppy, because it's kind of moved between 124 down to 122, but in very small fragments and quite not really with momentum, compared to what we've seen during the pandemic of last year, where it was pulling quite a lot of runs, and it's really quite a thing to see a currency pair like USD doing that. You can see from the ATR as well, from the height of the pandemic, where we were sort of averaging about 160 pips there, almost come down to kind of more usual levels. So now we're in the basically high 60s. Yeah, so that means that on average that's what we can expect to get. I was also looking at something else as well, which might be interesting to do on this chart here. Again, your USD, I've applied an indicator here called round numbers above and below, and you can see that essentially you decide how many round number levels you want above or below price, and it kind of plots it for you, so you don't have to do it. This green line I actually plotted manually with the horizontal line, and it's put it at 119. That was just to see basically how price interacts with a round number. Now, we don't really have many indicators like that around in your sort of standard packages. So this is somebody who's designed it, put it on TradingView shows. Thank you very much for that. It's really handy. I would say as well, then we go back to our other chart, that on the daily we've got that, but if you look wider, and that's easier to see if you go to the monthly. Now that is a channel that I put together quite a few times, and essentially it really shows you that downward movement through the years from 2008, the currency, well, sorry, not the currency crisis, the great financial crisis, and the currency appreciation before it, and then the way it dropped. And you can see that so many times it basically bounced between the different levels, forming a channel as it went, and then staying below the mean reversion line there, and then above it again. And so now it's actually broken through it, which is really fantastic, because that opens the door to a few things. It opens the door to the 0.38 level there, the halfway mark, which is not a fib level, but it's nonetheless it's there. Then the 0.61 above it, again strong level there, as you can see, and so on. Now obviously that's a long journey, it won't just happen in one straight line, but just to say that we're coming up as well to this level, and that's sort of 125, 124. We're not far off it, we're sort of 121.17 at the moment. So that's kind of our next challenge will be to get there. The ATR, as you can see, has dropped considerably from those high days, and that's where we are now. So historically we are quite low. If you look back on the monthly, as a month, we've been quite low here in for 2020, even with the pandemic and everything, compared to what we've been before. Look at these numbers. So we back in December 19, before it all kicked off, we're looking at about, what's that, 2,975 pips per month, and back here at the height of the financial crisis, we're looking at 8,000. It's nearly 3 times. So it's quite difficult, sort of making a lot of successful day trades, especially if the 100 pips or whatever happen over a few days in choppy conditions, and you look at the monthly, go, that's okay for volatility, but trying to trade it day in day out is quite tricky. So all of that to say that that's what we are in the monthly, and so we need to kind of look at that and say, how does price interact around round numbers? And that's kind of where we're trying to figure out this. There's 121 there. Okay, lovely. And we've just broken above it. We were below it, and we've broken above it. You can see how many times price has interacted with 121. Just coming in beneath it, not even 25 pips, and then staying above it, and then breaking, and then coming back above it. So statistically, because statistically, when you're looking at the between January and now, for a month, basically. If you look at the last month, this box here. This box here, let's just have that period. That's about a month, isn't it? Just over. Let's see that. So that's a month, more or less. And we can say that, well, in this month, when we hit the 120, oh sorry, 121, the green line, we were below it, but not even 25 pips, so just less than that. And so we stayed above it 1, 2, 3, 4, 5, 6, 1, 2, 3, 4, 5, 6, 12, basically 11 days, and we broke below it. And then we stayed below it just 1, 2, 3, 4, 5 days. So 11 days we were above it. First time we touched it, or kept sort of sitting on it. We're below it 4 days or 5 days, and then we're above it again. So that suggests that it's a solid level, and this break we've had hasn't been a very long-lasting one. If you got caught up in that break and lost money, you might think, oh, it's certainly the start of a downtrend. But you look at the overall movement at the moment, and you can see that it is a line up. If I go to my charts on FXCM, for example, you will see that actually I haven't got that one open. All right. Anyway, that's just my demo, but just to say that if I did it here, you can see straight away what I'm trying to tell you is that if you did a trend line there, actually I think it was above and it broke below it, and then we are, just think it was like that. Yeah, I think it was that. Essentially I done a trend line like that after this sort of triangular formation, and it broke above that triangle. Then the next touching point was here, and then the next one was there. That's one way to draw the trend line, and we've broken below it, and essentially we are just on it or above it. Another way to draw the trend line would be to start it really from there, and angle it slightly differently, i.e. making this your contact point there, in which case you'd have, that's not really a trend line yet because there's not really been enough confirmation. So from here, this would be your second point then, if you like. But either way, it looks to me like it's trending up. And if you really want to be sure, we put in an indicator of some kind, like a moving average, for example. If I put just moving average, and get a moving average of say 100, and that will give us an idea. That's a 9 though, which is too fast, so we need to make it 100. That's what I usually do. I usually do it in red. I've got a sort of code of colors for the different ones, so it's always that's always the one for me. That's the 100. Okay, so there's the 100 there, and look at that beauty. Just perfect for our purpose. We've just done the trend line there, and the 100-day moving average is just coinciding with that line. So we are basically, you know, if you look at that, we are uptrending. You know, since that break there above that triangle formation, we've been uptrending, and so you know, there's really, and then you could also say that there's an actual channel going on. If you make it, that's your, you know, channel there, more or less. You know, it doesn't take a genius. I mean, that's immediate. So that's kind of what I'm thinking at the moment, where we're at. Back to me. Here I am, and that's basically my idea for today. USD are bullish, and taking it one day at a time, of course. But that's kind of projections for me, kind of upward sloping, going up. So that's where we are, Euro bullish. Thanks very much, and I will see you in my next video. Thanks very much for watching, and I appreciate your comments and your likes. Take care. Bye. Good luck trading.